And once you can see that direct labor and all the time leakage that you're not getting paid for, and the real cost with the health insurance and the 401k and the bonuses and the training and recruiting, then you start to say, oh, wait, I am worth it. I put a lot of money into these people. And they cost a lot, and they're good because we invest in recruiting the best and training them how to be the best. And that makes a difference when you can see the numbers, when you can put your fingers on it. The biggest reason why it helps your cash flow is because you uncover billing opportunities. You can immediately be able to go to a client. This is how we've helped clients improve their profits by millions of dollars. I mean, going from break even to 15% EBITDA in a year by uncovering time leakage and being able to go to the client with the details of the out of scope work, the stuff they ask for, they're not paying for. If you do good work, clients are happy to pay for value.
Knowing your numbers in your business is absolutely essential. And oftentimes when I talk with business owners, they don't know what their bottom line numbers are. Meaning they might know what gross is, and then oftentimes they can't tell me what their cost of goods are sold. So if you don't know your numbers, you are just throwing money away. The other problem with that is when you don't know your numbers, you don't realize the profit margins you have. And once you do realize it, that's when you need to start raising your prices. So in this episode, I'm talking with Stephen King. He's the CEO of Growth Force. Now, Growth Force is a bookkeeping and CPA accounting type of company. What they do is they help businesses be organized on the financial side of things. It helps you avoid fraud. And on top of that, they're helping you bring in more revenue. It's a great conversation that we have today. One of the things that you're going to learn is you're going to learn the actual formula for raising your prices. And as you raise your prices, it actually shows your clients how you're going to provide more value to them. And it's a complete win-win. So Stephen has a legit background. He worked at Ernst & Young for a number of years, and then now he runs this company. As you listen to this interview, I'm hoping that what it does is it helps you see and inspire you to run a tighter ship. That's needed now with the pandemic and all the things that are happening. On top of that, he has an amazing giveaway, which is like a plugin for your accounting software and systems. As we know on this podcast, I'm not an affiliate. I'm not compensated in any ways. This is an interview with someone that I found that I think is going to be incredibly helpful for you. So we're going to jump right into the interview. And if you want to get access to those resources and any other valuable tools, just take a look at the show notes. Hey, Stephen, welcome to the podcast.
Thanks. Great to be here.
The subject that we have today is, I would say, the most important topic for business owners, especially with the circumstances that are happening. And so we're going to have conversations around cash flow. And our pre-interview, the pieces that we talked about, our listeners will be able to walk away with pieces that will actually help them apply it to increasing their cash flow and their forecasting and such and so forth. So where do we start?
Well, Spencer, this is the lifeblood of every business, and there's three reasons why businesses fail: cash flow, and cash flow. Right? This is all that matters, especially now. And to my mind, the starts with getting the right mindset. People's relationship with money screws up their business, and you have to have a feeling of abundance. You have to find a reason to be grateful. We're starting our company meeting next week with what's the one thing in your life that's gotten better as a result of this terrible, terrible global crisis. And from there, then you can start to, feel whatever blessings you got will pass through, is what I believe. Then you got to deal with reality. You can't make decisions based on emotions. This is the worst time to just go with your gut only. Gut's critical, but it's not first. Data should be first. And so I think it's helpful to know, cash flow is different from profits. Cash flow is about timing. It's the timing of money flowing into a business and out. And you really have to understand that timing in good times and in bad. So the way you do that, the first step is to prepare a cash flow forecast. We have a tool that we give away. It'll be in the show notes that is designed to help you see the sources and uses of fund over 13 weeks. We're recommending 13 weeks today because It's going to be July and August before we really know what the economy is going to be like. When the PPP funding starts to run out, that's when the truth serum hits. And this cash flow forecast will tell you that. If you're using QuickBooks, you can download from any version of QuickBooks the receivable report and the payables report, and it'll automatically let you just have all the customers and your vendors, and all you got to do is write in which week do you expect to collect from your receivables, from your customers, put a 1 through 13, and what week do you expect to pay your bills, your vendors, 1 through 13. And if you're not going to pay somebody, you leave it blank. And then that puts on a summary page the sources for customers and the uses of cash for vendors. And then you can manually go in and put any other sources of cash, any other uses of cash, your payroll, the stuff that's not in payables, your rent, your credit card payments. And that's the first step. And we created that tool, for our clients, but we're sharing it now to help as many businesses as possible. Just get that peace of mind, because it starts with the right mindset. I just talked to Ryan Jennings at Sentinel Builders. He's a home builder, actually at construction in New York City and Manhattan. And he emailed me, says, hey, this is the first tool I got when COVID hit and we shut down. And I was panicked. I couldn't sleep. And what this gave me was visibility. The fog lifted. I could see, all right, we can make it, and be able to plan in advance on what you need to do to make sure that you weather this storm. So if you just did that, that would be a good use of time. The next thing is to focus on collections, because the difference between profit and loss and cash flow is most of the time, in normal times, I'm having conversations with businesses that have profits but no cash flow. Like, I made $1 million last year. Where did it go? And that now you can have cash flow without profits. And it starts with collections. All the people that's past due. And the way you got to get good at that. Most businesses that we see, the person who owns collections is either the office manager / bookkeeper / IT support / receptionist, who doesn't want to get on the phone and isn't trained to get on the phone. Or the person who did the work, who has a relationship with that person and it's hard. What you've got to do is you've got to have the 3 F's. You have to be firm, focused, and friendly. Friendly, just people like to work with people, right? People work with people, not businesses. So you got to always be nice and caring. You want to be focused on understanding how to overcome their objections. Why can't they pay you? Just like a good sales rep knows the objections that a prospect has and is ready with the answer, your collections person needs to do the same. So there's basically, and then firm means you don't end any phone call without a commitment to an action of some sort, a promise, even if it's another call in a week. The focus part is important because there's 3 big objections. Number 1 is the check is in the mail. Well, the good news is now, if you're using QuickBooks in particular, you have the ability to use Intuit Payment Solutions, where you can make a deposit inside QuickBooks with just the check information, the check number, the date, the payee, and the amount, and the banking info. You don't need the physical check. But at the very least, if you don't have that, because we serve as Intuit products as well as Xero and NetSuite, can confirm they actually mailed the check if you ask for all those details. The second objection is, I can pay you half. And so we say, okay, great, we'll take that. When can we get the next half that you owe us? And then the third part is what we're seeing a lot more of now. I can't pay you anything. I'm just trying to have enough cash to pay the people that make me money so I can pay you later. And what we're suggesting is that now's the time to take credit cards, to get a merchant account and say, no problem. Because that 3.5% interest rate is nothing compared to loss of a client. Let MasterCard and Visa bear your collections risks. The next part of collections is about making sure that you don't let your clients' cash flow problems become your cash flow problems. And the way you do that is you got to review your credit policy. In whatever the terms and conditions are of your contract, they need to say, number 1, late fees. We do outsourced bookkeeping, accounting, and controller services for project-based service businesses and nonprofits primarily. And you get architects and engineers that say, I'm not putting late fees in my contract. You should now. And the reason is not to earn 18% interest, which is what we suggest, 1.5% per month, is that you want to get your bill to the top of the pile. And so by having late fees in there, a good controller is going to pay that. I'll talk about in payments in a second, going to pay the expensive debt first. You also want to make sure that your attorney, it spells out who's going to pay the attorney fees if you have to go to court, because that's going to happen more and more. And if you're trying to figure out who to default on, you're not going to default if you have cash, because you go to court, you're going to have to pay your attorney fees and their attorney fees. And then finally, what you want to make sure is that you spell out the terms. When is the money due? And what we suggest is now's a good time to change the deposit amount. If you're not getting a 50% deposit up front, do it now. I saw one company that said for jobs under $5,000, we require 100% deposit up front because why? We need to make sure we keep paying our subs so that you can get great service. I think the next big thing is changing your billing process. How often and do you do your billing? Because most of our clients start by doing billing monthly. And I was a Inc. 500 featured speaker for a couple of years, and we did some research on the best practices in the Fortune 1000 cash management, and they did the math to show how big of a difference it is to bill weekly versus monthly, or as soon as the job is done. Because the secret is if you can get paid before you have to pay payroll, and that timing makes a really big difference. Then you want to automate the whole process. That's one of the things in our advisory services department. We help our clients just eliminate all the manual work. The AICPA, I was on the executive roundtable, the AICPA predicted that the bookkeeping function will be gone by 2023, completely automated from technology that already exists today. And COVID has accelerated. So we're seeing a lot of people who are studying how many steps does it take to create an invoice, to get it out the door? Who's got to approve it? And what's the supporting documentation that you need? And then how do we streamline that? Intuit Payment Solutions allows you to be able to automate the entire process. You can send an invoice to a client with a Pay Now button that lets the customer enter a credit card number. It automatically processes, and 2 days later, through the merchant account, you can download it into your accounting system. So you automated the billing, the collections, and the actual cash application. What's nice is because it's all synced inside QuickBooks, you get a lot more functionality than doing it manually. You get automatic reminders. Every Monday, you can set another invoice that says, hey, I noticed you didn't pay the bill. Here's another copy. We found that lowers your days sales outstanding, the number of days it takes you to collect on your bill, from 30, 31, 32 to 14. Because when your customer gets the second email, they're like, oh, they're going to keep bugging me. I'm going to get rid of this because it's easy. I can just put it on the credit card and get the miles. So we're a big fan of Intuit Payment Solutions to automate your billing and your collections and the cash application.
It really sounds like you've built a lot of the automations and a lot of the pieces where a person doesn't need to think. And, for me as a business owner, I've owned a SaaS company and others in the past, this sounds secondhand, but when you mention the story of a real estate developer or builder or someone like that, they're bridging this gap and they're forced into this new world. And so what are you seeing with business owners that are coming from the old world of taking forever to do their bookkeeping and accounting and not having automated processes to now doing it? How are they bridging that gap quickly?
And we call it raging incrementalism. Every month you get a little bit better, a little bit smarter. It starts with the chart of accounts. What is your above the line cost versus your below the line cost? The number one reason why businesses have cash flow problems is pricing. They're not pricing their jobs enough to generate margin that will contribute to pay for the overhead and to contribute to profits.
Why do you say that? Like, why? And I totally agree with you there. Why do you think they do it? Is it A, psychological? They don't know that they're worth it? Or B, is it just a function of not knowing their numbers? And so it's ignorance is bliss.
It's both. And Spencer, you show that you've owned a lot of businesses because the emotional part is real. It's hard to say, okay, I'm worth $175 an hour. If your relationship with money is one from scarcity. And so, that's the first part. You have to feel value. I think what helps you feel value is the second part, which is digging into the details of the numbers. We do automated activity-based costing, right? You take your timesheets and sync it with your payroll and automatically allocate that labor above the line to show you what's in gross profit, your cost of goods sold, all the direct labor that your customer directly paid for. And once you can see that direct labor and all the time leakage that you're not getting paid for, and the real cost with the health insurance and the 401k and the bonuses and the training and recruiting, then you start to say, oh, wait, I am worth it. I put a lot of money into these people. And they cost a lot, and they're good because we invest in recruiting the best and training them how to be the best. And that makes a difference when you can see the numbers, when you can put your fingers on it. The biggest reason why it helps your cash flow is because you uncover billing opportunities. You can immediately be able to go to a client. This is how we've helped clients improve their profits by millions of dollars. I mean, going from break even to 15% EBITDA in a year by uncovering time leakage and being able to go to the client with the details of the out of scope work, the stuff they ask for, they're not paying for. If you do good work, clients are happy to pay for value. And what I hear back from my clients is, you are able to show me exactly what I'm getting for my money, and I'm happy to pay for it.
It's actually at a discount. So, when a person fully understands, you can look at your internal staff and your internal costs. And then when you're using freelancers or outsiders, then you realize we're actually, getting a multiple on our time and a multiple on whatever it is we're spending. So we're getting everything buying it at a discount. It's insane. So you totally agree there.
Yeah. And then, the other part of cash flow is the spending side. You got to make sure that your bookkeeper has a pay slowly rule and not a clean desk rule. Because, if you have a good bookkeeper, their desk is clean, they're organized, everything's in its place. But if they're just like, I'm paying these bills as they come in, if your cash flow is slow, you got to make sure that it's pay on time. I don't pay late, but we recommend Bill.com. It's a game changer. And I don't get paid anything from Bill.com, but I love it.
I use Bill.com as well, so I totally love it as well.
Oh, so here's a commercial for Bill.com. It basically allows you to be able to reduce your bookkeeping costs for bill payment we found it by 87%. This is what we do for a living, right? We're outsourced bookkeeping, accounting, and controller services, and we're good at it. It costs me $12.35 to pay each bill. Most of the time is chasing the owner for the signature and putting all the supporting vouchers together, and all that is gone. You scan a bill, you enter the account code you want to charge it to. It has automatic workflow to go to the budget manager so they can approve it. They can see the bill. They can see what account code it was. Is it charged to the client or not on your phone? And then when it's approved, it goes to the signature. Same thing. And what I really like about it is, we do a lot of work in fraud prevention. And there's real amazing studies. We'll hopefully talk about that again, but Bill.com allows you to be able to reduce the risk of fraud because you have a scanned image attached to each bill. We just saw a recent situation where, the average theft is with somebody who steals $175,000 over 2 years. And it starts with $300 and then $500. This poor bookkeeper tried to submit her own AT&T bill because her kids were at home, streaming Tiger Kings on an iPad. And she didn't have an unlimited data plan. And her husband lost his job. And all of a sudden, all of the things that you look for in a situation, lack of controls, personal financial troubles, convenience, and all they need to do was justify it. And we could see it because there was a second account that we didn't have before. So I'm a big fan of Bill.com. I also suggest that when you're paying the bills, you prioritize them based on, like I said before, the most expensive. If you've got that credit card bill that was 6% interest for the first 6 months and now it's 19%, use whatever available cash you have to pay that down in full, even if you have to borrow from a lower expensive line of credit, because interest rates are an unnecessary drain on cash. And if you've got cash flow problems, pay the most expensive debt first. That's obviously why you put a late fee now on your contract.
You mentioned another piece. We're talking about fraud. We're talking about preparation. We're talking about using the right credit. One thing that we've addressed on other podcast episodes, we'll have to link to in the show notes, is the availability of good credit. And so when a person uses a good bookkeeper, their books are tight. It's really easy to talk with the banker and get additional lines of credit.
Oh,
But
yeah.
if you are sloppy, you might as well just turn around, walk out of the bank, forget those conversations.
I believe strongly that Spencer, this whole thing taught you that your relationship with your bank is critical. If you knew your community banker, you got the PPP funding fast. And if the banker didn't know your name, you went into the pile with the 150,000 other applications. What I believe strongly here is the bank wants to know wherever you're at, good, bad, or indifferent. And right now, it's particular, there's no judgment because it's a crisis. It's not a function of your situation, but they have to, if you go in there with a clean set of books and you're able to show a projection that says, look, we are on top of this, they make the decisions to give you money based on their confidence in your business, not on just the past results, but if you're well positioned. And so that's why I recommend, you put your numbers to work. That's our logo, our motto, because you want to turn it into a strength, and then cash flow won't be an issue. But I want to come back to one last thing because I know we're almost out of time. Pricing. Okay, the one thing that's important I started to talk about is you've got to allocate your labor costs when you run the payroll. You've got to be able to see what's above the line versus below the line, so you can see your true gross profit. That's how you improve your cash flow and identifying that time leakage. And there's two vendors that have this automated. Intuit Payroll for desktop only. There's no job costing, project accounting online yet. And Insperity. And Insperity has it for both QuickBooks Desktop and online. And every time you run the payroll, it'll allocate it automatically to above the line, below the line. Then you can see the profitability of each department, of each team. And if you have timesheets, well, then you can go real further. We recommend T-Sheets as the best time tracking system by far. Intuit just bought them, fully integrated into QuickBooks Online and Desktop. And if you have T-Sheets or timesheets, you can see profitability by customer, by each job. And once you have the unit economics, once you see the profitability of the customer, you can figure out what's my most profitable industry, my most profitable sales reps, who's selling a discount, who's selling value, what marketing campaigns generate the most profits. The list is endless. So I'm a big fan of Intuit and Insperity to help you do activity-based costing for small businesses.
So I think for our listeners right now, we've covered the pricing, we've covered being organized and looking at, the advice from using Bill.com, and we've even touched on fraud, which I think we're gonna have a follow-up conversation about.
Cool.
One thing that really comes to mind is this: if you take the time to actually go through these things, get yourselves organized, you're going to know how much you're charging. You're probably going to be sick to your stomach and realize it's too low, and you're going to be able to bump yourself up. Now, you mentioned one thing that was key, that was really important on this, which is if you can quantify the value that you are actually charging, it's not going to be seen as an additional cost to your customers. They're going to see that as additional value. And so it is a complete win-win situation because it's now quantifiable. It's not emotional at that point.
You give them three choices. If you give them three choices, then they're in control. First choice is, here is your original agreement, and here's what's out of scope. I can stop doing that and stay in your budget. Or I can add these additional values that you're getting, and here's the cost of those. Or I need to transition you to another provider. Firing your clients will give you profit through addition. And the ones that don't, once you understand your above the line costs and you start pricing the new jobs at the right rate, before you hire your next employee, because you're hiring somebody because you need more capacity, go look at the lowest profit margin clients and figure out which ones you need to swap out bad money clients for good money clients. That's how you increase profits and improve cash flow.
All right. That's the soundbite of the podcast. That's amazing. Listeners, what I want you to do is a couple of things. One, inside of the show notes, we're going to put a link to the tool that you can use with your bookkeeping services. You got to use it. And second, go and take a look at what Growth Force does. It's at growthforce.com. As many of our longtime listeners know, I'm not an affiliate. This isn't a sponsored podcast. I'm not compensated by any way. what I do is I do the heavy work on your behalf to find honest, reputable people and then present them to you. And we have a great conversation, and hopefully it provides a lot of value. So I appreciate this conversation we got to have today. And I think we're going to have to dovetail for another time on that fraud protection as the PPP loans start to come about, as people start to feel more cash flow crunch. Some people are going to do unscrupulous things, and let's make sure that we spot those before we happen. So let's be proactive versus reactive. Thanks, Stephen.
I look forward to it. Thank you, Spencer.